Hello, everyone. I'm William, and this is Abraham for PropertySold.ca. And the big news this week in real estate and in mortgages is that the Canadian government has changed their mortgage rules. And we're going to talk about the big one. We're going to talk about the shortening of the amortization.
Yeah.
So, Abraham, do you want to explain that new rule?
Yeah. Jim Flaherty has proposed changes with regards to the amortization, reducing the maximum amortization that Canadians can take on to their mortgage from 35 years to 30.
Okay.
It used to be 40 at one point, if you remember, guys, and then it went down to 35, and now it's down to 30. And you never know. They may come up with something saying it's going to be 25 in a short period of time. We don't know.
Yeah.
But they've come up with these rules in order to, and this one in particular, in order to fight the growing value of homes and the housing bubble news that we've been hearing, and the threats of a housing bubble. This is ultimately going to bring some people out of the marketplace. Right?
Yes, it's going to basically, if you have a 35-year amortization and you're making $100,000 a year and you've got, let's say, a $30,000 payment, a down payment, you're able to afford a $540,000 home. That's over 35 years. Mm-hmm. Now you change that to 30 years, all of a sudden your budget goes to $500,000. Yeah. So that's essentially $40,000 off of your maximum budget for the home. So this is going to have a huge impact on the real estate market.
Oh yeah, and people are going to have to buy, look for cheaper homes.
Yeah.
Value is going to have to come down to match the needs of the buyers. Mm-hmm. Less people are going to come out of the marketplace, so you're going to be looking at less demand, and less demand demands lower values, property values. So this is really going to one step towards that. They were thinking of raising the interest rate or raising the minimum down payment from 5% to 10%, but that doesn't help first-time Canadians get into homes.
No, and the interest rate can affect so
many other things.
Other things in the economy. So
this is one step that they hope is going to do what they need to do. Mm-hmm. Values have doubled in the last 5 to 7 years in many markets across Canada. Yeah. Doubled is a huge number when you think about it, because incomes have not doubled, right?
No,
so
exactly.
So this is a really good step, I think, in order to help bring down things. It's not gonna be a big deal, but the people who really need it, they don't have it anymore. That extra 5 years of amortization, that lower monthly payment is just not there. But don't fret, guys. This doesn't take into effect until March 18th. So if you're looking for a bigger house and you know that you're going to need 35 years to qualify, get your approval in now. It's not 100% clear, but I'm certain that because it comes into effect on March 18th, if you have an approval in place, they're not going to take that away from you. Once it's been approved, and no matter when the closing date is, they're going to have to honor it. It's every application that's been adjudicated after that date is going to be affected, right? So get out there and put your approvals in as soon as possible if you really need that 35-year amortization.
So it could have some serious effects on home prices in Canada. Like we said, you can afford less. But I think the Canadian government is trying to reduce the amount of debt that people take.
As well,
And the good thing about it is that people aren't going to be, spending 35 years to pay off their mortgage. They're able to do it shorter in 30 years.
Yeah.
And hopefully it's going to have long-term benefits for the Canadian economy.
Oh, yeah. Listen, 35 years, remember, guys, 35-year amortization, if you take that long to pay your mortgage, you're paying over double what your principal was to begin with. That's a lot of money. 30-year brings you closer to even Steven, you're paying about double. 25 years brings you below double. So, you take that long, put your minimum payments and pay it off over 35 years, you're paying over double what your mortgage was to begin with. I mean, that's a lot of money to be dishing out. And that really cuts into your future savings. I mean, you're going to make X amount of dollars in your lifetime. Let's not pay it out in interest costs.
Excellent. Yeah. This is William and Abraham for PropertySold.ca.